Alright, so someone posted, they made a video, and they were talking about the euro, and they brought up a really good and very interesting point about right here. I'll just highlight it real quick. So about this bear breakout, and I really did not, I just lost my place, there we go. I didn't really pay attention to I did not really pay attention to the euro dollar today or yesterday, but I wanted to bring up right here because it brings up a really good point. And you know, this I think this person's exactly right. They were saying that 3 bars down, maybe measured move down, spike and channel. In other words, a second leg down at this point. We should get that. And this happens a lot. And you've always got to be careful about, what's going on. So think about it for a second. Trading ranges have really deep pullbacks, and so many times you get second leg traps. And they always look, they never look clear. They always look strong. They always look like they're gonna, be some form of a second leg. Here we go. So arguably strong enough bull spike, maybe the breakout started here, and a lot of traders see this is 50%. So let's review the bull case and the bear case, and I'm going to move this kind of just right here out of the way for a second. So right now, without looking at the prior days, we see a bull spike, possible final flag, a failed bull breakout, and maybe strong enough breakout, second leg up, but we had a breakout strong enough right here for another leg up. We got it, and now we have a bunch of bear bars down. So we have to be thinking about, okay, is this strong enough? Is this strong enough for a second leg down? And we actually had that today in the E-mini as well, in a sense. So ignore the leg down. We got a bull breakout and then a pretty deep pullback. And the question on everybody's mind is this a 50% pullback for the bulls and we're going to retest this high, or is it a strong enough bear breakout for more down? Now the context is different here, but anyways, we get this bear breakout, so always in short, but the problem is, look where you are. You had traders who will sell this high, scaling higher. Usually in a trading range, the market allows you to avoid a loss. So even, I wonder, let's say we sell this high, we sell more below a bear bar here. So we know this is a 50% pullback already. The bears sell this high, they sell more down here, they get out break even. You always have to be careful. If this is a strong bear, if this is going to be a bear breakout, we need follow through and we need it quick. So, where I'm getting at is the bulls see 50% pullbacks. You had other bulls who will buy this low, and they'll either buy 10 pips lower, 20 pips lower, or they wait for a bull bar. Arguably that bull bar didn't trigger, but this one did. And they'll add on right here, look to get out possibly break even. You can see some traders did that right here. Other traders will simply buy here, buy more lower, get out up here, betting the trading range. Strong enough up for a second leg, we'll probably close the gap. We did. However, Al talks about this in his new course as well. Look how many bull bars we were getting on the way up. We've had 1, 2, 3, 4, 5, 6, at this point, 7 bull bars out of 9 total bars. That's a lot of bull bars. So my two main points are this. Number one, you will have traders selling, buying this, buying more lower, betting on a second leg trap, and betting that trading range. It was reasonable to buy this low. The follow through, maybe the bears needed one more bar. There's many reasons, giant leg 1, leg 2. traders saw this as, leg one, this kind of a maybe another leg down, and they saw this as leg two, or maybe this is leg two. Really, it doesn't matter. They see two legs down. So, aside from that, let's take, we've discussed the bull side. How do you manage this trade if you sold? So it doesn't matter anywhere, maybe always in short, sell this close. We've closed below arguably the past X amount of bars. So sell this close. We'll probably get a measured move down from this close, which we did. Very well, probably, really we didn't. But anyways, sell this close. And let's say you're trading, you're swing trading. Maybe you're betting on a measured move down. Well, you're not going to get out above here, but you might. You're probably thinking, okay, I'll hold above this bar, betting first reversal up should fail, and, bulls need a micro double bottom. Well, this, I got to kind of zoom in a little bit because of the left side of the screen, but I'm going to kind of just go over here. Here we had a first entry, pull back, second entry. So as soon as, you got to ask yourself, look what happened. Bears sell this close, disappointed by the follow through, and as soon as it went below, they immediately bought. That's not good, and it's very well possible, I said expect a second leg down. It's very well possible that this is all you get for a second leg down. A lot of times you get a move that starts over here and it goes sideways for a while, and then you get a second leg down. I don't think it was really, arguably. So yeah, so it's really just kind of seeing a few things now. So a lot of swing bears will get out above here, and they're going to get out of their shorts, and they're going to look to sell. As this person said earlier, this particular person said it's better to, when you see this right here, this breakout, probably wait to sell a pullback, and he's exactly right. And the reason he's right is because if you're going to sell this breakout, you've got to know what to do when you see this. You've got to be prepared to exit at a small loss if you sold down here. Or, it's kind of those two things. You either do that or you hold, but when you see this, and especially that, 4 bars up, as this person said, you get out. So, it's kind of that. Bears get out above here, and aggressive bulls will buy. However, they're going to get out if the bears can get a decent low too short. And the bears really need to they need to get a gap here. And then maybe if they're lucky, we'll get a measured move from double top. We already got that. Maybe measured move down from this. There's no real clear measured move down. But this right here is a problem for the bears. We had a low one short here, but this for the bears is a problem. Bull breakout, kind of a surprise. Probably expect a second leg up. Now we've had 4 consecutive bull bars, so the buying pressure is increasing. And we've only had 2 bear bars here, and the bears really aren't doing enough. So you have to be thinking, okay, maybe we will. You've always got to think about the opposite. If you get a bear breakout that fails, you may get a measured move up. So people are going to pay attention to what's going on over here. And low 1 short, arguably a low 2 short here and here. But again, arguably it didn't trigger, and it's really not that great of a short. Tight enough channel, maybe 2 legs up. And you can see it's clearly always in long at this point. Pick a bar. The problem is it's such a tight channel that you're probably going to, at worst, get a pullback and another leg. You have bears who are trapped who sold down here. And they're just getting squeezed. So that's why it's so dangerous. We had this in the E-mini earlier. Just want to point it out if I can find it really fast. We had, I know Al was talking about it the other day, right here. So big gap up and a sell-off, big enough sell-off, consecutive bear bars down. Not as strong as that 4x one, but the idea is still basically the same, and that is 2 legs down, possible exhaustion. Bears sell this close. They can't get out at break even, and then they're faced with 4 bars up, 5 bars up, 6 bars up. See, the problem is you have traders who sell here and they'll look to sell 2 or 3 points higher. Well, if they sell here, sell a few points higher, what do they do when they see this? They're just going to take the loss. Same thing here. If I'm going to sell this close at, let's say, 75, so 1.0875, maybe I'll sell more at 85, so 1.0885. Well, that's all the way up here. So I've also got to think about, the range is small, which makes it more of a problem. Second, do you really want to be, selling after this? No. So you're probably going to get some sort of breakout. And look right here. Just look and count the number of bars. And, clearly we're probably going to get some sort of second leg up. And we go sideways. But again, the bears trying to defend their stops, trying to get a sell-off back, but we're just getting too many bull bars. And we're probably going to get a second leg up. So, again, maybe some bears get out here just because, some sort of double top maybe will test down. So I could see some always in bulls getting out here, but at the same time, the bears are failing and they're trapped. So they'll probably get long again. And, we got a relatively deep pullback, but then this kind of sealed the fate. And then we got this big rally. So, hope this kind of helps answer that question. And yeah, I wanted to answer a really good question.